Gotta set it up. All right. All right. Hello. Welcome, NextOppSocial family. Welcome to another live chat discussion here on the NextOppSocial channel. As always, I am Rochelle Wright Wilson. I'm joined by Joan Buford. And today we are very excited to bring credit restoration expert, Mr. Lance Petway, here to NextOppSocial channel. So alongside financial education services, Lance helps people with clearing their credit with negative items and provides the financial education that should have been given a long time ago. So before we jump into chatting and learning more with Lance, as always, if you're watching with us here either live or on the replay, please make sure you hit that subscribe button on our channel so that you never miss an interview, a live, or any of the incredible discussions here we have at NextOppSocial. Okay, let's get into it. Welcome, Lance. Thank you again for joining us here today. We're very excited to have you and talk about your journey. So let's jump into it. Tell us more about yourself, your background, and because we are about entrepreneurship here, what caused you to fall in love with being an entrepreneur?
Well, first of all, thank you for that introduction. And before I get into it, I just want to thank you, Mr. Buford, for the platform that you guys have. I was able to look at a couple of past interviews, and it is phenomenal. You guys should be syndicated or something like that, because you truly, you know, especially from the entrepreneur standpoint, I like it because you guys hit the different topics that a lot of people don't know, like a lot of the information which we'll talk about today. So thank you both for providing this platform and then inviting me on the show.
Thank you.
So as Ms. Wright said, my name's Lance Petway, and kind of give you a little bit about my background. I didn't start out in credit restoration. I graduated from Eastern Michigan University with a degree in finance, went to U of M, Go Blue for my master's. And then I got into the mortgage business in '93. So I was doing mortgages for 21 years. But what positioned me, what happened was, I'm sure most of you know, 2008 hit a lot of us hard where we had that recession. And it hit me really hard. I ended up losing, I still get goosebumps about this. I ended up losing 13 homes, including my own house, in a matter of months. Wow. About 10, 11 months. And here's the crazy thing. I did everything right. I went and got my degree. I started a career. I started to build. I saved. I got into investing, did everything right. And then all of a sudden, everything was gone. And I'm a spiritual man. I believe God does everything for a reason. And here I was all those years in the mortgage business. People would come into the bank. You had great credit, boom, let's get you the mortgage. If they didn't have great credit, sorry, can't help you, walk them out the door. Now here I am, I lost 13 homes. I'm trying to find a place to rent. And I knew that my credit was bad, but guess what? I still had my same job, still make the same income, still had X amount in the bank. And I told people, listen, just give me a 1-year lease. I'll pay the whole year rent up front. Not one person rented to me. I can't tell you how many people I went through, how much money I spent on application fees, because I figured, oh, I got great credit. You know, they say cash is king, right? It wasn't at that time. So here I am living in a buddy's basement. Talk about a humbling experience, not knowing anything about what to do and how to do it. Fast forward a year and a half later, I was introduced to United Credit Education Services, aka Financial Education Services. And in 5 months and 3 weeks, they took me from a 533 to a 724 credit score.
Wow.
In 5 months and 3 weeks, they got rid of a bankruptcy because I had to file a Chapter 7 bankruptcy because of the short sales. And what a short sale means is the bank allows you to sell the house for less than what you owe. So let's say I owed $100,000 on a house, they will let me sell it for 30. Because homes in the south, and these are all suburban homes. Madison Heights, Wisconsin, Kego Harbor, Royal Oak, that were worth 30, 40, 50, 60,000. Wow. But I didn't realize that shortage, now they were coming back after me, and it was over 600,000. So I had to file that Chapter 7. It was removed. Every single short sale removed. Every single foreclosure except for one was removed in 5 months and 3 weeks. So a year and a half living in someone's basement, and less than a year, I was back on the map again. About a month and a half after that, you know, at the same time, people that were coming into the bank that were turned down, that I walked away, now I'm sending them to United Credit, and they weren't hardly as bad as me. They were coming back 2, 3, 4 months later with great credit. Now I'm getting them the mortgage. So about
I
a
love
month
it.
and a half after that happened with my credit, me and my wife talked about it. We prayed about it. And I walked away from then a 21-year mortgage job. I walked away from a great salary, a company car, ridiculous benefits. But guess what else I walked away from? A 10-hour a day job, Monday through Friday, 4 hours on a Saturday every other weekend. And I tell you this, and I truly believe that me switching over actually probably saved my marriage because I was
Mm.
newly married at the time, had a daughter who was less than almost one at the time, and my wife wanted me at home. But where was I going to go at my age and make the money I was making in less time? It just wasn't there until
Hmm.
this happened. So now we're able to help so many different people, and I can get more into it, but I know some of the ebb and flow of the call will continue to cover it. But I am so blessed that I know this sounds nuts. I am so blessed I lost 13 homes. I am so blessed I had to file a Chapter 7 bankruptcy because it allowed me to help people anywhere in the United States with helping them turn their life around when it comes to credit.
I love it. That is, and I was going to ask you to share that story. And I'm so glad that you did. Because, I joke about this all the time, but I'm really not joking. Right? You have these people out here, they watch one YouTube video, they read one book, and then they start dispensing business advice like they've been in the game for 20 years.
Right.
And to hear you share that story, not only are you out here sharing information, but you're a practitioner. You went through it. You can actually walk people step by step what that process looked like for you. It's
Right.
such a powerful testimony. No test, no testimony, right? So,
Right.
And you're actually a product of the product, so to speak. And so I know that's why the passion comes through so clearly, because it's not like you're talking about something academically. It's not third party. It's what you went through.
Right.
And you said a couple things in your story that are triggers to me, though, that I wanted to do a little bit of a deeper dive on, right? Because you already probably know where I'm going with this, right? You see the YouTube videos, the radio advertisements, where people pay $90, $200, $1,000 for individuals to remove bad credit history, right? So whether it be foreclosures, whether it be repossessions, et cetera, et cetera, et cetera. And they promise, hey, if you just pay us this money in about 3 months, you're going to go from 500 to 800 credit score, right? And
Right.
so I want to debunk something, because I know a lot of people get caught up in this stuff. And, how can you tell whether or not a program is legitimate? When you say they remove these items from your credit history, I mean, what did that process actually look like? So how can you decipher be transparent, the frauds from the individuals that can actually do the work for you and help you level up?
Man, that's actually a really good question. And because I see it all the time, people saying, oh, I
Mm-hmm.
gave someone this, I gave someone that. Oh, they were in a white van, they had a computer in there, so I figured they were legit. I mean, like, here's the problem.
Uh-huh.
When desperate people get someone that knows that they're desperate and they're not legitimate, they know to go for the jugular.
Mm-hmm.
So here's a couple of things to know right off the bat. You cannot ask for any money up front when it comes to credit restoration unless you are a bank, an attorney, or a nonprofit organization.
Hmm.
That's the law. Those are
Mm.
the three things that are in place. We're a nonprofit organization, so we're not one thing that debunks. Some people think we're a credit restoration company. We are not. We're a financial services company. We focus on financial literacy and credit
Mm-hmm.
building. So credit building is a part of it. But that's the number one. If someone's asking you for X amount of dollars up front, okay, are you a bank? Are you a lawyer? Do you have a nonprofit organization? That's number one. Number two, if people tell you, oh, I guarantee you results within 30 days, 60 days, 90 days, run for the hills because nothing is guaranteed. It's not about what they can do. It's the creditors. Like when we're talking about negative items, the creditors are the
Yes.
ones that decide that. The
Right.
collection companies are the ones that decide that. Unless there's some, magical person, they don't know how the responses are going to be to the disputes.
Mm-hmm.
Now, some people, what they'll do illegally is they'll say, hey, go file a police report, say it's fraud,
Mm.
turn it into the credit bureau. The credit
Mm.
bureau, as soon as they get that police report, they have to immediately take it off. But guess what happens? If they do that research and they find that it wasn't, you just filed a
Mm.
false police report. Now you got more problems just when it comes to bad credit.
Right.
So those are the trigger items to look for. And another thing too is like, okay, what results have you had? What do you do? What do you do besides just taking off negative items? How do
Mm-hmm.
you do it? What way do you do it? Just ask pointed questions just to see what the response is. If they're humming and eyeing about it, you might want to take a second look.
Right. So one of the tactics that was really popular 10 years ago, I used to hear people talking about it all the time, is they would say, sit down, write a letter to a collection agency, or write a letter to a debtor, and submit a payment, and basically say if they can't prove that the item exists, or if they accept the payment, that they have to remove the information from your credit report. That was like huge 10 years ago. I
Right.
saw a lot of people fall into that. Talk to us a little bit about that. I mean, to what extent is that effective, and how do you actually do that legitimately?
Great question. So here's the thing. What's the old saying? Don't poke a sleeping bear. Some of the people that had that negative item, it was old and it wasn't even factoring into their score. Now you're sending a payment and writing a letter like, oh, this person's interested in like settling. Let's start collecting on them again. Now that collection account that may last have been updated in 2009 is now updated 2021. Now you got a current collection as opposed to a dormant one, and next score is automatically going to drop. Now more than likely they're going to become an athlete. So I can just tell you the 3 ways that we go about doing it, and we do it legally. Like my bankruptcy, my short sales, or foreclosures, any clients I know, nothing's ever come back on the credit report because we do it legitimately. So we go after 3 different ways. Number 1, we do open up an investigation with Experian, Equifax, and TransUnion. Just show us that this is a legitimate account, because I could have an account with American Express, but how do I know that that's my American Express? What if it's another Lance Petway?
Right.
So one of the things why we have success with that letter is if they don't respond back to us within 30 days, the credit bureaus, by law, it has to come off the credit report. So if the letter goes to the credit report agency then calls American Express or the collection company, the medical bill, the student loan, whoever it is that's being disputed, and they have to respond back within a certain period of time. The credit bureau then needs to update the credit report and mail that updated credit report back to the consumer. So generally, if they go all the way to the 40 days, including mail time, you figure within 40 days, you should have a completed investigation back. That's number 1. Number 2, we have our own credit attorneys. The attorneys work strictly for us. We can do business in all 50 states, including DC and Virgin Islands. So they work strictly for us. It's strictly about credit. And they'll look at the bankruptcies. They'll see if there are any errors that were done, because I don't know about you. I was a great mortgage person, but I made mistakes.
Yeah.
Right? Don't you think that the bankruptcy attorneys make mistakes? Don't you think the bankruptcy courts make mistakes? Our attorneys look for those mistakes, which allows a couple of things. Number 1, get the bankruptcy removed, or whatever that negative item is removed, but also file for monetary damages if it's something that's not corrected in a certain period of time. So that's number 2. Number 3, we have an amazing program called Smart Credit. So Smart Credit not only monitors their credit, it also monitors their credit score, their auto score, and their insurance score. Because especially if you live in Michigan, you know that your insurance is high if you got bad credit. I don't care if you live in Birmingham or Detroit. Roughly 40% of your insurance for your house and your car and life insurance is based off your credit score. As crazy as that sounds. Of course, getting a car loan is based off your credit score. If you got a credit score below 580, you're probably very familiar with credit acceptance. Ally Financial, Capital One Auto, they charge the max. The max in Michigan is 25.9%. I think in Arizona it's 33%. So think about that. You're being leveraged because of bad credit. They don't care about you. Like what happened with me, they don't care about your job, your down payment. 33% interest rate. Do you think you're getting a 2001 car? A 2018? No, you're probably getting a 2010 car, amortize it over 7 years, paying $400 a month, and you pray that that car lasts for 3 of the 7. On top of the insurance, we have so many people with low credit scores that come to us. They're paying $700 to $800 a month on a 10-year-old car. And we, of course, get a lot of people that are violent. You know, back in the day, you used to, you know, if you knew you were behind in your payments and you're going to work, you park about 3 or 4 office buildings down, right? Because they couldn't find your car. They couldn't take it, right? Now people are leaving the car in their driveway with the keys and the ignition on. Go ahead, take
Yeah.
it. I don't want
Yeah.
it. That's how crazy it's become. I remember in some of my mortgage days, I see some of the processors and some of the mortgage people walking. I'm like, why are you guys walking? They're like, oh, we got to park down the road. They might come take my car today. So when you don't have great credit, you get leverage, right? When you have great credit, you do the leveraging. So now you don't have to get a 25% interest rate. You get the best price, the color you want, the type of model you want. They drive the car to your house. You get the best insurance. Leveraging versus being leveraged when credit is everything. So those are I meant to go. So the third way we do it is through smart credit. Smart credit, we do an electronic dispute. So that goes direct to the creditor collection company. So we're going through the credit bureau, we're going through the credit attorneys, and we're going direct through the creditor. And we're disputing everything all at once. I don't care if it's a bankruptcy, judgment, tax lien, foreclosure. I don't care if it's an inquiry or a medical bill that was paid. We're going after everything all at once, and we're doing it 3 different angles. That's why we have the success that we have on top of some of the other positive building that we add to it as well.
I want to touch on too, which you did a little bit into that question. That kind of taking a step back. Let's going back even to the beginning of it.
Mhm.
With so much of what you do is educating us on this aspect of credit that we are just not taught. We are not taught anywhere. It's on our you're not taught unless someone has taken the time to teach you, right? Because they understand how important it is. And I want to just reiterate how important it is, because you did touch on it, that so much of our daily fundamental parts of our lives, our home, our way of us, our transportation, just how we're going to conduct our daily lives is resting on credit and our credit scores. So I want to kind of talk around that, because I think that a big part of what unfortunately makes this topic taboo sometimes is there's this shame around what we don't know and what we don't understand, and then not knowing what to do, right? And there's also this fear around even checking our credit to see what these numbers are, and then understanding what those numbers are. So what do you tell people when you first kind of meet them to kind of dispel some of the shame and fear, to get them in this mindset of we can fix this and you can learn, and it can get better.
Right. And good. You guys are making some really good questions here. Some of it I've never been asked before. So a lot of my business for me and my team throughout the U.S. comes from corporate accounts. Realtors, mortgage people, car dealerships. A lot now comes from social media. So when people are reaching out to us, they've been turned down, or they just, a lot of people just trying to find a place to rent, and they can't because of credit. So a lot of people, when they come to me, I ask them, okay, tell me what, first let's find out what you're looking to do. You're looking to buy a home, you're looking to get a job, what are you looking to do? Because one of the things people don't understand with credit now, it's not just about buying a home or renting a home. Credit is tied to so many things. Do you know that DTE, consumers, cable companies pull your credit? And if you don't have a great credit score, guess what? You got to put down a security deposit. I had a lady had to put down a $600 security deposit for DTE, and I think it was $300 for Consumers Energy because of her credit.
That's crazy.
You know that when you go get a cell phone, if you're getting it financed, they're going to charge you more if you don't have great credit. Most jobs now pull your credit. I had a lady who was an RN at Beaumont Hospital, went through a divorce, and she went to go get a seasonal job at a children's clothing store. Do you know that a woman that was in charge of saving lives was turned down for a part-time seasonal job at a children's clothing store because of her credit? And she wasn't really responsible. Unfortunately, her ex had, just stopped paying things. And, unfortunately, in a household, only one person takes care of the bills. So that other person, God forbid something happens, they have no idea what's going on. That's why we encourage people to do budgeting together, pay bills together. My 10-year-old daughter is involved with our investing. She's a big Robux person. That's a game that kids play. It's going on the stock market today. And guess what she asked me? Hey, can we buy stock in that company so I can be an owner? This is a 10-year-old. These things that we talk about should be in school, like you said. It
Yeah.
shouldn't be in college. It shouldn't be in high school. It should be in middle school.
Yeah.
Starting them out young. If they know all these verses to these songs, they can learn about credit, right? So that's where it all starts. A lot of it starts at home, but we got to make sure the parents are having the correct info. Because I don't know about you guys, but my parents, they just said pay your bills on time.
Right.
That was it. Well, that's only 30% of your credit score. There's a lot more to it than just paying your bills on time. So it's about the education piece. And if we don't get it from our family, guess what people go through? They go to the YouTube and they hear all this misinformation. And I'll be honest with you, when I was a mortgage person, if someone didn't have great credit, we just said, oh, go pay those bills off. Go pay those collections off. Well, sometimes their score dropped even more because it was like we talked about an old collection. Now it's new. Even though it's paid, it's now new. So there's a lot of misinformation out there. But I think that it's very important that we get the right financial literacy, the right information, because it's not just for home ownership. It is for so many different things. I have a gentleman that got a degree from criminology at Ferris State University, 3.2 or 3.3 grade point average. Went to go apply for a job at DPD, Detroit Police Department. Was turned down to be a cadet, not because of his grade point average, because of his credit score. Was never taught about credit. We're now building, so he became a security guard. We ended up building up his credit, and I didn't even know this, but last fall, I'm looking at the news, and here he is walking across the stage as a cadet. So we talk about changing people's lives because of credit, and it all starts with the mindset that we can make this a generational change, get people to understand the true meaning of credit, how credit works, what are the 5 different factors of credit, and then teach that to our kids so that it can continue to go on. Because think about where a majority of the places make their money when it comes to corporations. They make their money through people with bad credit. So why would they want to teach us that in school? Farmers insurance, Allstate, car insurance, they don't want to know that. A lot of the mortgage companies don't want you to know that. Credit card companies definitely don't want you to know that. And charge cards like Macy's, Victoria's Secret, Mobile, they don't want you to know that. So we got to start educating ourselves and then start educating our youth, and we can truly make a change for the next generation.
The implications of what you're sharing run so deep. I mean, what most entrepreneurs, like when I think about, especially the business owners are getting started today, right? And the teeth or tail end of the pandemic, however you want to characterize it. The bottom line is things are tough for people right now. And most business owners starting up, they're micro business owners and they're bootstrapping, right? They're being creative with their finances. They're being creative with their spaces and how they build their businesses. They're being creative with the resources that they avail themselves of to build their businesses and how they acquire certain things, regardless of the type of business they're in. And $100 to $200 in a budget makes a difference when you're a micro business owner just starting out, right? I mean, just something that small, and just to hear the implications of that, right? What the real impact of credit is. I mean, we always bring it back to entrepreneurship here. That's what we're about here at NextOppSocial, right? And I had never even thought about it in those terms until you articulated it, that, the actual cost of it, I mean, life insurance, I mean, these are financial instruments that I think are essential, right? So, I think life insurance is essential. Obviously, car insurance is essential, whether you like it or not, right? A lot of these things that you're talking about are like essential things. I mean, getting the phone. I mean, you can't, and you could be in a situation if your credit is challenged enough where you could be easily paying an extra $500 a month just for essential things alone, if not more. And when you think about the implications of that, I mean, there are a lot of business owners that are going to fail. And there are a lot of entrepreneurs where their businesses are going to go belly up because they can't feed the baby. They don't have the disposable income to invest back in their businesses because they're paying this cost of bad credit. Or, it's pretty significant. I mean, that's huge. So, I mean, we talked about some of the tools, right, that are available to you to fix to go about the process of repair and what that looks like, right?
Mhm.
But what can people do in terms of not just repair, but what can people do to build credit properly, right? Because, and we had a little bit of this conversation in our previous interview, right? Because once again, you hear a lot of myths out there. You know, one of them is jump on other people's trade lines, right? Find somebody with good credit, jump on theirs to improve your credit, right? You hear stories about acquiring secured credit cards, and that's just across the board. Like, how does a person even determine what is a good secured card to have, right? What are some of the advantages and disadvantages in terms of those options? You know, I mean, I hear all kinds of stuff, you know. You just touched on one of them, which is pay back your past debts, or you pay back your past debt. That, like you said, can open up Pandora's box, right?
Yeah.
So what are some of the things that actually work, where if an individual is sitting at that 550 or 580, whatever it may be? And you also touched on something else that caught my attention too, right? Because a lot of people, once again, they buy into these myths. They just take 1 or 2 steps. Somehow, magically, things are going to change over a 30-day period of time. I think you kind of debunked that. But, you know, what are some of the steps that individuals can take?
Man, this is my favorite part, because this is where we differentiate from everyone else. Because again, we're not a credit repair company. We're not just, okay, send this letter out, fingers crossed, let's see what happens.
Right.
No, it's like you said, it's about building credit. So here's some things that you can do on your own and things that we can do to help you. So number one, a lot of people have not heard about Experian Boost. Experian Boost is a program where if you pay your cell phone, your utilities, your cable bill, a water bill, even Netflix or Hulu, you're paying those bills every month and you don't get credit for it. Now you can go to Experian.com, get a free website, get a free Experian account. Under credit report, go to Experian Boost, you click the button, and then you just attach the bank account where you pay those bills from. And within 10 seconds, it'll boost your score up.
Wow.
Within
Really?
10 seconds. Now, and I've been doing this for over a year now. People have all 5 of those. So cell phone, utilities, gas, utilities being gas and electric, water, Netflix or Hulu. I see an average of 30 to 47 point boost within 10 seconds on
Wow.
Experian.
Wow.
Now, some people, of course, if they're not homeowners, they don't have a water bill. They don't have a Hulu or a Netflix. So if they're adding about 3 of those, they're going to get about a 20 to 25% boost. And if they just are adding cable, so a lot of people live with family, maybe they're a college student, they just have their cell phone, they're going to get about a 5 to 10 point boost. But it's a free program. It's something that's so simple, it takes less than 5 minutes. Now remember, that's just for Experian. It doesn't go to Equifax or TransUnion.
Right.
Just another thing for people to understand, Equifax, TransUnion, and Experian is like McDonald's, Burger King, and Wendy's. All fast food places, but totally separate companies, right? McDonald's isn't going to share their special sauce with Burger King. So if Experian, you get something removed, they're not going to share that with Equifax and TransUnion. So 3 separate entities. So that Experian Boost is a free program, takes 5 minutes, do it, get it done. It will help tremendously. The second thing that we do is, just like you aren't getting credit for your bills, and just so you know, when you do Experian Boost, they'll never report any past due payments. Anything in the past that was late, they'll never report. Anything in the future, they'll never report late. They'll only report the on-time payments. So the second one is just like people aren't getting credit for their bills, they're not getting credit for their rent payments. And you know, rent payments are generally the biggest expense someone's going to have.
Yep.
So imagine someone paying $1,000. So I have a young lady I spoke with this morning. She's been paying rent for 9 years. You know, it's gone up over the time, but right now she's at $1,200 a month in rent. So we figured it out. She's paid well over $100,000 in rent in those 9 years, and not getting any credit for it. So one of the cool things that we can do is we can add that $1,200 in rent payment to her Equifax and TransUnion credit report. Not only can we add those rent payments out of report like a mortgage/rental payment, we can go back and add the last 2 years of rent.
Wow.
So that's $24,000 in rent payments that can be added in the matter of days. Now, I want you to think about this. One of the things about credit is the longevity of it, right? So we just helped a lot right there, because we put in 24 months of payments, 2 years worth of payments in a couple of days. Number two, a lot of people don't have a good Installment history with the car loan, of course, if they're renting, they don't have a mortgage. Now we've added a big payment as well too. So we've covered two things. So just think about just using Experian and adding your rent history for the last 2 years. And best of all, we don't need a lease agreement. We don't need canceled checks. We don't need money orders. With TransUnion, it's just a verbal verification. We call the landlord and we ask 3 questions. How long has the person lived there? How much do they pay? Have they ever been more than 30 days late? That's it. No more phone calls. With Equifax, we just kind of like with the Experian boost, they just attach their bank account to the Experian account, and then they'll see the payments of the rent coming out as well too. So no paperwork needed for that at all. So that being said, we get a lot of people that live with family, a lot of people that live with mom and dad. Well, if mom and dad are homeowners, guess who the landlord is? Mom and dad, right? Mom and dad are the homeowners, so we're calling mom and dad. How long has Junior lived there? How much does he pay? Has he ever been more than 30 days late? So as long as you hadn't ticked off your parents, they should say all the positive stuff, right? College students, like adding rent is such a big deal and it's something so simple and quick. So that's 2. Number 3, we can provide a personal loan. We can provide a $500 or $1,500 loan with no credit check. Here's how it works. They get a $500 or a $1,500 loan. A $500 loan is $48 a month. A $1,500 loan is $150 a month. That money doesn't go direct to them. It goes into a CD. A CD is a certificate of deposit. So they're going to be earning interest on that money while they're paying the bank back. And once that loan is done, they're all 12-month loans. After that 12-month loan is done, if they got the $500 loan, they're going to get about $538 wired back to them. If they got a $1,500 loan, it's going to be about $1,600 and change. So it's almost like a forced savings account. But what the credit bureaus see is that, oh, you got a $500 loan, you got a $1,500 loan. They don't know it's secured. Just like with going on to our 4th one, a secured credit card that Mr. Buford was talking about. A secured credit card versus unsecured simply means is that secured means you don't have the scores, you don't have the history that they can trust you to just give you a card. So with us, you're going to have to open up a bank account. It can be as little as $200 up to $2,000. It's your choice, and you'll get a secured credit card. That credit card will be secured by that bank account. So if you get a $500 credit card, you charge it up and you never pay it off, the bank's not going to lose because they're going to take that $500 savings account, pay off that account. So that's what's the unsecured means that you're just getting the card based off your score. You know, you don't have to worry about opening an account, you're trustworthy. So those are the differences between the two. But what's great about our secure card is we don't require a credit score. You can have a 0 credit score. I had a guy that had 12 or 13 charged off credit cards, and we still got him a $700 secure credit card at 9.9%. But most importantly is I showed him how to use that card. Because again, 30% is how you pay it, 35% is the utilization. So I make sure he keeps that card between $20 and about $140 a month. Reason why I don't want him to pay it off, I don't want it reporting every month that it's a 0 balance, like he's not using it. I want him to leave a $20 balance on there so the credit bureaus can see low utilization, paying on time, that score is going to go up that much faster. So those are 5 different things. The 5th one obviously being our credit building program. Those are 5 different things we can use to help build our clients' credit. Some need all of them. Some only need 1 or 2. But that's what's great about our company is we don't pigeonhole one product and shove it down their throat. All right, this is where you're at. This is what we're going to use, and this is how it's going to benefit you.
Fantastic. I love it. So I'm listening to you, and I hear these things, right? So utilization impacts your score, right? You said something that caught my attention. And what I've been hearing out there, and it's just, once again, it's across the board. Some people say keep utilization at 10%. Some people say keep your utilization at 30%, whatever the case may be. But I hear that being a huge factor. Payment history, right? And of course, you want to understand the longer the payment history, the better that improves your score as well, right? And then there's another one I hear about out there where they say you once again, you acquire a secured card, and let's say you have $500 worth of available credit to you, but you go out, acquire a secured card for another $500, so your available credit is now $1,000. And if you're only spending $200 to $300 per month anyway, just from the previous card, that boosts your score as well. Like, what are those, I guess, 3 or 4 or 5 major factors that actually determine what your credit looks like?
Yes, so there are 5 factors. So the first factor we talked about is payment history. That's 30% of your credit score. Of course, it's very important. The second one, as we just talked about, is the utilization of credit. So I generally get 2 different type of people: people that have no credit cards and people that have a ton of credit cards. So we deal with those 2 different ways, right? So the first way is obviously getting them to secure a credit card, so that, and then show them how to use it. And 30% you always hear, but I like people to be at 25% or less. You give someone with bad credit 30%, they'll probably go to 40%, right? So let's tell them 20% so they go to 30%. So that's the theory that I use for people with no credit. People that have a lot of credit debt, I had a lady, she had it was just under 20,000, but let's just use 20,000 as what it was. So she was 20,000. I'm sorry, her credit limit was 20,000. She owed 15,000. So she was what, 85, 86%. She didn't have 7, 8, 9,000 to pay down those credit cards. So what we did instead was we built her credit score up enough that I got her another credit card and a personal loan. So the credit card, I think, was 3,000 and the personal loan was 2,500. So now instead of a $20,000 credit limit, she now had a $27,000 credit limit. She still owed the 17, but now she just went from 85% down to like 52%. Her score went up, I think, 46 points. So her score went up 46 points just by adding the credit. I didn't want her to use the card. I didn't want her to get use the personal line, the revolving credit. I just wanted to get more credit utilization out there, or credit limit out there. So we're able to increase her credit score, not by paying down the bills, but increasing her credit limit with those 2 new accounts. So that's number 2, the utilization. Number 3, and this is big, everybody, the type of credit that you have. See, there's credit cards and there's charge cards. People think that Macy's is a credit card. People think that Home Depot, Victoria's Secrets, Mobile, Shell are credit cards. No, those are charge cards. The best definition I can give you for a charge card is that card can only be used at that store. So you can't take your mobiles and go to Victoria's Secrets and buy clothes. You can't take your Victoria's Secret to Kroger's and get food. God forbid you're in an emergency. So they're limited. And I don't care if you have an 850 score, which is the max, every charge card is going to be high interest rates, 25%, whatever the max is in the state. Us is 25.9, other states it's even higher. You want credit cards. Credit cards are Visa, MasterCard, Discover, American Express. Now, I'm not saying you can't have any charge cards. I say do a 2-to-1 ratio. So if you got 2 credit cards, you can have 1 charge card. Where people get in trouble is they go to the gas station, they go to the grocery store, I get an extra 10 cents off a gallon. I can get 20% off this bill. Now they got 4, 5, 6 charge cards, not even realizing it, and it's hurting their credit score. So again, the type of credit you have, that's number 3. Number 4, Mr. Buford, you said it as well too, the length of history. So that's why that rental history for people with lack of credit helps so much. Before the recession, it was about 2 years worth of history you needed. Now it's 4 years worth. So if you can have 3, 4, 5 accounts with 4 years worth of history, that will help build. Now, some people tell someone, close that account out. Guess what happens when you close that account out? You lose that history. Your score drops. I don't know if either of you've ever seen it, but a lot of people pay off a car loan. Guess what happens to their credit score? It drops.
Yeah.
Because that payment's gone, and people don't understand. Like, I don't understand. I paid off my car. Isn't that a good thing? Before the recession, it was great to have no debt. Now the credit bureaus like to see you have debt to see how you handle it. So that's number 4. The 5th one, of course, a lot of people here is inquiries. Inquiries are 10% of your credit score. So one of the worst things that can happen if you have a 580 credit score lower, people go to a car lot to get a car loan. You don't have great credit. They're going to pull your credit 7, 10 times. I've seen it as high as 15 times. And it's not just for the fact that they're trying to find financing for you. Remember, they get paid a commission on the financing part as well. So people don't know to say, hey, just pull my credit one time. Again, you're being leveraged. People are pulling your credit, dropping your score for their benefit, for their pocketbook, to sell you a car at 25% interest rate, and it's a 10-year-old car at that. So those are the 5 different factors. payment history, utilization, type of credit, length of credit, and inquiries.
So you mentioned Experian, TransUnion, Equifax, right? But there's something else is out there called your FICO score, right?
Mhm.
And I know a lot of people download these apps to their phone, and it may give them the score according to Experian or their score according to TransUnion.
There's a
that
lot
may
of
not-
apps. That's another.
Yeah.
There's a lot of like, oh, download this app for your credit score.
Yeah. But those scores aren't necessarily accurate, right? It could be showing you that you're a 650 on the app, but you're really a 580.
Right.
Like,
right.
what's going on with that? Like,
Yep. So I'll give you an example. I love Credit Karma. If someone comes to me, they have no idea what their credit score is, I have them go to Credit Karma. But if you look at Credit Karma and these free sites are powered by Vantage 3.0, Vantage with a V. Vantage 3.0 is more of a consumer score. And there's a reason why these apps are free, because Vantage 3.0 is free. If you go and get your FICO score, you're going to have to pay for it, or you're going to have someone pull your credit.
right.
So that's the biggest difference. People say, "Oh, I've got a 700 credit score. I'm ready to get refinance or whatever the case may be," and they find out they got a 600 score. So on average, on those free sites, your creditkarma.com, freecreditreport.com, Sesame Street or Sesame, whatever, not Sesame Street, that's a show, but Sesame something, those, you want to subtract generally 50 points from those scores to get an idea what your FICO score is. So if they're saying you're 650, more likely you're 600. You're 600, you're more likely 550. So that's the rule of thumb. And again, I love these sites, and they actually have a disclaimer on there. So if you go to Credit Karma and you click under your score, it'll say this is a Vantage 3.0 credit score, not a FICO score that most companies use, such as mortgage companies, car dealerships, credit card companies. But a lot of people, who looks at the fine print, right? So there's a big difference in those scores. Now, if you're over 800 on those, more than likely you're 800 on FICO as well. We're referring to people with anything below 700. You're going to see a big difference if you actually go get your credit pulled.
One thing I want to ask is over this past year, right? Because you did talk about, 2008 and like everything crashing and all these realizations and whatnot. Have you seen behaviors or things that have shifted even in this past year? Because I know things are moving quickly of changes or like right now, mortgage rates are historically low and now they might start going up. And what have you seen over since the pandemic, right, has really pushed everything into motion? What have you seen even in terms of how people are coming to you and what they're coming for, or have you had to shift at all what you've been doing to meet those needs?
It has been, and I don't take this the wrong way, some people, but 2020 was an amazing year for us.
Yeah.
And here's why. We had roughly about 44,000 people active in our program before the pandemic. As of last month, I think we're at 161,000. So we've added 120,000 plus clients that are serious about their credit score. And that's not including the people that are already finished. So there's this, I think when people have gotten home more, they realize, man, we want to do home improvements, we want to move, or God forbid, they're going to get evicted as soon as this memorandum is done because they hadn't been paying their rent. They're like, man, we got to do something. So I think people are really starting to get educated on credit and seeing that it's important. But the problem is people don't know where to start. Just like with me, a mortgage banker, 18 years at the time of the recession, a degree in finance, a master's in business administration, and I knew nothing about credit. I sat on my derriere for a year and a half and someone faced me because I didn't know where to turn to. So I'm seeing more of an enlightenment now because people hear stuff and they think they become smart with it. They're like, oh, just pay down to 30%. Some of the stuff that Mr. Bucher was saying, some of the myths that are out there. But it's a lot more to it than that. So I think people are coming to the realization that, man, I need to really start getting my life in order here because I need a roof over my head. One of the biggest, fastest industries right now is the extended motels or extended stay hotels with the kitchens and everything because people can't get a place to rent. So they're paying that. There's a gentleman paying $750 a week to stay in extended stay with his family. I have a young lady on my team now, and I'm not sharing her dirty laundry because she shares this. She joined my program a year and a half ago. She was homeless, living in a hotel with her husband. She's has a very successful warehouse. She does uniforms for the NFL, cheer teams, high school, yada, yada, yada. So we end up getting her from homeless in that hotel into an apartment within 3 months. Last October, she just finished building her house, building a house and moved into it. So homeless to building a house, it was starting to be built. She just took over and finished it up. So within a year and 2 months, she went from living in a hotel to living in a $350,000 house. And she joined my team as an agent because she's been helping so many people just with sharing her story. So it is amazing. Like, people are really starting to buckle down. And I heard this the other day on CNBC. I thought it went up, but people are saying that the U.S. has, and the number I may be wrong, but they paid off over $110 million in credit card debt during the pandemic. I may be off on those numbers, but people actually have been paying down debt during the pandemic as well. Probably because guess what? They saved on car and gas, right? I know some people work from home. They didn't have to travel as much. They didn't go on those vacations that they couldn't afford, right? Putting a $2,000 vacation on a credit card, and then 2 years later, they're still paying it. So I think a lot of it had to do with just people being forced to really look at their finances, and now they've got that extra money to pay stuff down. Of course, stimulus helped, unemployment helped. I know a lot of people made more money on unemployment than people in the food industry. So yeah, I just see a big change. I pray that it will continue once everyone's vaccinated. I pray that people will become more knowledgeable with it. And we just want to continue to grow the home ownership, get people to become homeowners. Because you're going to pay a mortgage no matter what, right? You want it to be your landlord's mortgage, or do you want it to be yours? That's where it starts. That's where a lot of wealth comes from in our society, is with real estate. This is how much I believe in the product. So I go and I buy homes, and I have other investors now that I mentor, and then I do an open house, but I only do an open house for people with bad credit. People that have great credit, all right, let's get you approved and get you another house. This is for someone that has a good job, has a down payment, but doesn't have the credit. Then we sell them the house on a rent to own. But guess what happens with the rent to own payments? It includes our credit building program. It includes the $300 or $500 secure credit card. It includes adding their rent to their credit report, like a mortgage, in their previous 2 years. So on average, in 3 to 7 months, they go from doing a rent to own, that they're now qualified for a mortgage and they can buy out of that rent to own. But they're already in the house that they want. If this program didn't work, I would probably be looking for a rental place, because my wife would kill me for putting people with bad credit in our homes. Right. Same with my investors. So that's how powerful this program is. You can take someone with a 390 credit score, have confidence in putting them in one of your homes, and they're going to continue to deliver, and they're going to finish the program. I started this in 2015, and not one person has ever not completed the program.
Wow.
So I know one of the inhibitions people have, right, to paying for these programs is, I can do it myself. Where I can write the letters, I can do the research, I can do it all myself. And I remember 12 years ago, I learned this lesson. I tried to do it myself, got some results. But when I was thinking about it, I was like, man, I'm spending about 10 hours a week, like trying to do it myself. I'm like, this is crazy, right? Because time is money. And so, I'm actually selling the product for you now, because I more and more over the years, I've become a believer in it, right? Because I think about it, what is it, like $98, $100, or it's somewhere in there, right? Somewhere in that ballpark that people are paying for. And I'm thinking, man, that's a 30-minute, 1-hour appointment for most business owners, right? So you really want to spend 10 hours a week trying to do this stuff yourself? Right. When you can pay the cost of one night's outing for you and the family and delegate it to professionals who are far better at it and more effective than you are. I was like, because admittedly, I considered doing it myself again 2 years ago. And the more I talked to you, Lance, the more I was like, And then the more I looked at the program and I started doing the cost benefit analysis, it's not about the $100. It's about the time saved, right? The time saved that you can spend focusing on other things. I know several business owners right now, that's what they're doing. They're trying to do it all themselves. And I'm just like, dude, that's like 10 hours in your business. How much is that in revenues?
Right.
And I got to believe that's more than 90 or 100 or whatever. Anyway, I'm done. But, I had to go there because that's what I was thinking about while I was listening to you just now.
Well, think about this. You know what? I can go right now and go change my own oil. Right? I could go cut my own hair. Look how that turned out. Right? I could pull my own tooth and I could save money.
Yes.
Why wouldn't I want to go to a professional, pay $20 for an oil change, pay $25 for a haircut and whatever for get my tooth pulled? Right? Like, and that's another point with the entrepreneur. You hit it on the head. If it's going to take you 10 hours, how much money do you make in your business if you spent that 10 hours just as focused on your business? It's opportunity cost. What's the cost for you to do this on your own? I don't do my own taxes. I got a professional. I have professionals in my life because I want to focus on what I love doing, which is credit and real estate. Why would I want to try and do something else? So that's what's great about it. And again, what our program, it's not just credit. I'm not going to name it all, but they get credit restoration. They get the credit attorney. They get identity protection. They get credit monitoring. They get a will, trust, and power of attorney that includes a financial power of attorney and a health power of attorney. Our agents, they get $100,000 in life insurance with no exam. I have a couple older couple, he has diabetes pretty badly. The wife, not as much. He can't get life insurance at all. The wife was able to get it, but she was paying like $125 for a $30,000 policy. Just didn't make sense. Now they've got life insurance and a will, trust, and power of attorney, and they actually don't even pay for it because we got a referral program. They refer 5 people over. It's $89. They don't even pay the $89 because they've each referred well over 5 people each. People from their church, people from their home, their friends, their family members. So it's so much more than just that, but you get all of that for $89, $3 a day. And my wife loves Tim Hortons, and she goes there probably 5 days a week and spends probably about $50 a week. I'm like, let's go get those K-Cups. We go to Ollie's, we pay $25. It will last for a month, right? But she just wants her Tim Hortons. It's just, you just need to sacrifice for a short time. I tell people, treat this like a college semester. You're going to need to be in it for 3 to 4 months. I want you to go to class for 1 to 2 hours a week. That's it. Right from your laptop, your phone, your computer. Get on your website and learn about financial literacy. We got videos in there. We have a program called Debt Zero to show them how to pay their debt off faster. Not by making more money or working more hours, but they put in the monthly payment, the interest rate, and what their balance is. And it uses these algorithms and spits out a report. Because I don't know anyone that wants to stay in debt. So all of this is included, plus there's more, but it's people, the $89 is an investment in yourself. You can't look at this as a bill. I went to college, thank God my parents paid for it. They paid well more than $89 a month over a 4-year period. We're talking about $89 a month over a 3-4 month period to go from a $550 to a $750, to go from renting to owning, to go from that 2010 Hyundai to a 2020 whatever the new car, Jaguar, or whatever the case may be. $89 a month to invest in yourself. $89 a month to truly change your life, your kid's life, and provide that legacy for them. That's what people got to understand. You've got to invest in yourself. You're going to invest $100 to go to Red Lobster. Invest $89, something that'll last more than just an hour or two.
I love it.
So we're getting, this was a fast hour. I'll say this flew by.
Shoot. I'm gonna have to switch to my phone. Hold on, I'm listening though.
Okay. So as we get towards our wrap up questions, even though I've got like 8,000 questions, we definitely have to have you on again. But one of the questions we always end with, and trying to end on, this has been a very positive talk, but ending on a positive note is, if you if you had to pick, right, and you can answer either or both, if you had a superpower or what you would consider your spirit animal would be?
I've always loved a lion. I don't know why. I've just always associated with the lion. I love how they, they can be solitary individuals, or they can be part of a pack. They have that option. Sometimes we just want to be alone. Like, leave me alone. Close my door. Let me go somewhere. But other times we want that pack mentality with all our family around us, our kids, our parents, our grandparents. So I've always associated with that lion. But guess what? That lion goes hard. That lion fights for his family. It fights for survival. And that's what an entrepreneur is. We got to fight for stuff. We're going to work a lot of hours, but guess what? We're working for ourselves. We're not working for corporate America. So what we put into it is what you're going to get. So what I tell entrepreneurs, when you start out, you're going to work a lot of hours for very little money. But later on, you're going to make a lot of money for very little hours.
Yeah, perfect.
I love it.
And if you could sum up, and there's so many.
I don't know if I like that game.
I know, but if there was one absolutely important takeaway that you would want a listener to move, after listening to all this, and there's a lot of action points that you've given them, and a lot of things that this is definitely a rewatch, re-listen episode. But if there was one very important lesson that you want to leave our audience with regarding entrepreneurship, or with what you do, what would that be?
That's a really good question. I would say, first of all, like, if you're sick, you're going to go to the doctor, right? You're going to get a checkup, find out what's wrong with you. If you don't have great credit, if your finances aren't in order, you got to get a checkup. Wait, what's wrong with me? Where is my money going? I'm making X amount a month. Where's my money going to? My credit is bad, but I don't know how bad. So get a checkup. How do you do that? Like we talked about, go to creditkarma.com, go to Experian.com, and just look and see what's on your credit report. It may be ugly, but you can't ignore it. You got to look and see what's going on, because guess how much money it's costing you? Figure out what you pay in rent, how much your interest. A lot of people don't know. I always ask, what's the interest rate on your car loan? What's the interest rate on your credit card? They have no idea because they don't want to look. So you got to open up that hood and get that checkup and see what's going on. So that's the very first step. See what your credit scores are, and see what it's costing you. And then you can go from there and make an informed decisions. Perfect.
Lance, if people want to reach out to you, which we encourage they do, if they want to talk with you more, if they want to learn more about your program, what is the best way to get in touch with you? I'll give you two things. I'll give you my email address, and I'll give you my phone number. I encourage text a lot more than email, just because I get a lot of it, but they can reach me on my cell via text. They can call at 248-935-7683. And I know some people, they just, they don't want to do that first talk, right? Because they're just afraid to know what's going on. They can also email me at greatcredit@outlook.com. So that's great, GREAT, credit, CREDIT, @outlook.com. Perfect. Thank you, Lance, so much. This was such an amazing hour. We appreciate all of the incredible insight you've given us, and we will be sure to have you back in the future. Make sure everyone who's listening, share this with your family, share this with your friends, share this with your entrepreneurship friends, especially. This is definitely one to rewatch, and we will talk to you all soon. Thank you so much, guys. Yeah, I'm definitely a fan and definitely subscribing. So I encourage everyone else to do the same thing. This is great content.